Hi everyone, I am CS Surbi Punshi, Indirect Tax Expert at ClearTax, and today we all gathered here to understand about the GST reconciliation for FY 22-23 and also to understand about the things which we should remember and we should do before 31st March 2023. Not only this, there are a lot of things which we should always keep in mind while we are even closing our books of account and certain adjustments which we should do in GST returns or maybe somewhere else. So we are going to cover about all of this in today's session. But before we even start our session, I just want to check if you all are able to hear me or not. So if you are able to hear me, just say hi on the chat box. Great. So it seems like everyone is able to hear me. So with this, we'll just start our today's session, which is decoding year-end GST reconciliation for FY 22-23. So whenever we thought of reconciliation, may always say that there are something in relation to outward. There may be something which is related to our inward. There are certain things which should file it so that we don't end up paying more taxes to the government or we don't end up paying interest or maybe penalties to the government. So there's something we have to always keep in our mind. So just to understand all this, we have just categorized this part. So first, let's focus on the sales and the supply related things, which we should keep in our mind before or while we are even filing our GST returns for the month of March. Now, here the first one is about the sales reconciliation. So whenever we talk about sales reconciliation, we all understand that today we send certain information while we are filing our GST1. So we show and report all of our outward supply in our GST1. It also include our outward supply where the recipient would be liable to pay the taxes. And though it's my sale, so I have to report that in my GST1. So I will always be showing all my outward supplies in my GST1, whether it's an exempted supply, it's an export supply, it's a B2B or B2C large, or it's a nil rated supply. Every outward supply forms part of my GST1. Similarly, when we look into our GST3B, there we actually pay the taxes to the government. Now we will be paying the taxes on our outward supply. We will also pay certain taxes on our inward supplies where we are liable to pay the taxes under reverse charge. Right. So these are the both places and these are the information we furnish in GSTR 3B. But when it comes to showing the outward supply, this information is part of GSTR 1 as well as it is part of GSTR 3B. Right. A simple example is if I talk about nil rated exempted supplies, right? It is part of GSTR 1. It is also part of GSTR 3B. It's just we are not paying any taxes on top of it. So it becomes very important that we reconcile that information which we have furnished in our GST1 with that information where we have actually paid the taxes in GST3B. So these two should always match. And if there are certain discrepancies, we should understand that why there's certain discrepancies and try to adjust, make all the adjustment in the March return period itself. There should not be any, I would say, the different years things which is happening, because let's say there was something you had made certain mistakes in GST1, you realize that okay, there's a mismatch in 1 and 3B. It's always good that you rectify that in the March return period itself, because if that flows into the next year, then your next year will have some unadjusted entries. So it's always good that you do that in the same year itself. So we should reconcile properly one, the 3B and the books of account. So if there is certain differences in your liabilities, what you have reported in GST1 with books, you just correct it, report it correctly. There could be certain amendments you may have done in your GST1, but you forgot to put that amendment impact in 3B, then you should get that corrected too. There can be certain places where you may have recorded certain entries as maybe B2C supply. Maybe the time you were filing your GST1, that time the GST itself was cancelled, but at a retrospective impact, the GST now is like revoked, right? In such case also that particular customers wants that, okay, I want to claim that ITC, can you please make it to the B2B transaction, or you actually have shown the incorrect GST number, right? So all that entry should be corrected before, I would say, or while you are filing your GSTR 1 or 3B for the month of March, so that this does not go to the next year. So this is one important point which we should understand, do proper reconciliation between these three. Not only this, we should always scan our books of account. We should always look into our entire revenue GL properly. We should look into the income side and check whether all the transactions which is happening there, whether the GST was leviable or not. And if GST is not charged, you should understand why it is not charged. You should know the reason for that. There should be a proper reconciliation between your revenue GL and your GST1 and your books of account. Because if there are certain entities which is coming as a part of revenue GL, but you have not paid any GST and you have not even reported in GST1, you should know the reason for that. For example, there can be something which is interest income. Interest income may form part of your revenue GL, but it is not part of your GST1. So you may have differences, but you should know why that difference is there, so that tomorrow when you're closing your books of account, you know, okay, this is something I know, and I know the tax will not be charged on this. But let's say if there is something like maybe there is some sale of mutual funds, there were some investments you have done, and then you have sold the mutual fund, there we know that we have to charge some GST. So in that case you should again, or maybe we have to do certain reversals, so you should understand that in case of the sale of mutual fund we have to do certain reversals, then whether the reversals are done properly or not, right? So though there is no GST to be charged because it's an exempt supply, but we at the same time understand that there is some ITC to be reversed, whether that ITC is reversed or not. So you are now looking after the income side very carefully, whether this is a no supply thing or it is a kind of an exempt supply or it's a taxable supply. If it's a taxable supply, well and good, just make sure that the taxes have been properly shown in GST1 as well as GST3B. If it's an exempt supply, just check whether the proper corresponding common credit, if there is some common credit, whether the ITC on the common credit has been reversed or not as per rule number 42 or 43. And if there are other things, just make record of that. Okay, this is something where it is not a supply itself. So if it's not a supply, that's okay, but you should make a proper reconciliation entry that this is why I have a difference between these two books of accounts, or maybe my, I would say GST1 or 3B. So similarly, once we are done with the reconciliation, we should also pass on the proper utilization entry. We know that whenever we have the liability which is there in our books of account, whenever we made the payment in our GST 3B, just make sure the proper entry for the same has been passed in our books of account. So this was one sort of reconciliation, and which is really very important because the GST 1 versus 3B versus books. And not only that, you also have to check with the revenue GL. So do the proper reconciliation with the revenue GL as well, because there may be some transactions which may form part of your, let's say, tax liability, like stock transfer. Right? If you're transferring from one GST to another, that entry may be there in your tax GL but not form part of your revenue GL. Or I would say it's not your even income, right? Because stock transfer is not income at all. So there will be differences, but you should just know about it. Now the second important part, it is about the e-invoicing. Now you all know that now e-invoicing is applicable in case your turnover is greater than 10 crore, right? We all understand. And when we're looking into this limit of 10 crore, it is from starting, which is 2017. So if in any of the year, starting from 2017, your turnover exceeds 10 crore, then in that particular case, this e-invoicing is applicable to you, right? We all understand that. But now you will be saying that what's new in that? So here the important factor, the important thing which you should remember is that, okay, we know that there are certain exceptions where invoicing is not applicable. Let's say if you're an SEZ, right? Or maybe if you are banks and all, invoicing is not applicable. I'm assuming you're not in that category. Now, if you're into the other category, other than to whom these exceptions are there, in such case, if your limit of this turnover exceeded 10 crore in the previous financial itself, which is in FY 22-23 itself, then we all understand that this e-invoicing is applicable for you from 1st April 2023. So for the SSC, for the taxpayer whose turnover exceeded the limit of 10 crore in FY 22-23, then in that case this invoicing is applicable to all of them from 1st of April 2023. So for them, they have to take a proper care that they have started generating IRA number, they have proper system in place, they are actually moving from a real base. Because one of the problem we always face is that we are not even ready with the systems. So we are generating invoice, we are just giving it to the customer without even looking into that this invoice should have a proper IRA number. And if this does not have the IRA number, then this invoice in itself is not even a valid invoice. So whatever you're issuing to the customer is a wrong invoice. But here again, we are only talking about the B2B document, the export document, or supplies to an SCZ, right? So that is what we are talking about. We are not referring to the B2C document, because when we talk about invoicing applicability, it's to the B2B and the export documents. Now the another part is, because here we said, okay, this invoicing is applicable in case of B2B export and supply to SCZ. Similarly, we have the concept of QR code. So in case your aggregate turnover is more than 500 crore, which is starting from again 2017 till your March 2023, in any of the year, if your turnover exceeds 500 crore, in that particular case, if you're raising a B2C document, in that particular case, you have to get this QR code. This QR code is not related to invoicing. This QR code is a payment QR code, which you should have in your invoice while you're issuing this to the final customer. Right? This is something which should again keep in our mind in case your turnover limit exceeded in the previous financial, which is FY23, which is FY22-23 itself. So this is like another important point which we should again understand when it comes to the compliance part. Right? Now, because we are talking about the invoicing, the important part which we should understand, because earlier we used to say that, okay, I want to create the invoicing on the voluntary basis. Can I do that? Till now, we don't had on any option where we can actually generate the IRA number on the voluntary basis. But now this option is available on the portal. We can register ourselves on the voluntary basis and we can start even generating the IRA number. So that's like a good thing, because many times we want to try that out, but we were not able to. But now we can always do that. Moving to the third important point, this is in relation to your exports. So if you are dealing with your export, now again, export can be with payment of IGST or without payment of IGST. So if you are actually exporting goods or the services, which is without the payment of the IGST, which is under LUT, in particular case, you have to file for an LUT application for the next financial year, which means all the export transactions which you are doing, all the export invoices which you are issuing, before that you should have a proper LUT, which is a letter of undertaking, which should be filed on the GST portal itself. So already it is enabled for FY 23-24. The LUT form, this is already enabled on the government portal. It's a very simple form. You just have to enter two witness details, and there you have to file it with the help of OTP or the DSC. Once that is done, you can always go ahead and start doing your export business as you're already doing. The only thing is that this application is very important when you're looking from the point of view where you have to do export without paying any taxes to the government. Now, when we are looking into the LUT, because if let's say you are an exporter, the another important point is about the shipping details. Many times we may have noticed that, okay, I have raised an invoice in one particular month, but it is still not shipped. I have not even issued a shipping bill, or I don't have a shipping bill details with me. I'm already done with the GST1 filing. When I'm done with the GST1 filing, and if I don't have the shipping details with me at that time or at that moment, I have to make sure I have done a proper amendment in the next month and have kept the shipping details. Because unless there is a proper shipping details while I'm filing my GST1, I will be facing issue with my refund. My refund will not get processed unless the shipping details are present as a part of my GST1. So many times we would have noticed, and this is the problem which we actually faces, is that let's say I have generated the IRA number, and once I was generating IRA number, because it's on a real time basis, I issued an invoice today, and I have also generated the IRA number against that export invoice, but shipping details was not present at that moment. So that time I have not entered the shipping details while I was generating IRA number. In that particular case, now this particular information got auto-populated in our draft GST1. So when we look into the government portal and we just check GST1, we saw this invoice was present. When we saw this invoice was present, we also end up filing my GST1 as it is. Assume I was only having B2B or export documents. I didn't have anything else. Maybe even if I have B2C information also, I added the B2C summary and filed my GST1 by entering my B2C as summary or the HSS summary and document series. So here I forgot to even update the shipping detail. Now, if that is also the another problem you're facing, you have to just make sure that you are amending. So if you have not filed your GST1, just make sure the shipping details are present in that export transaction so that you don't face any issue with the refund. And if you have already end up filing the return in that way, then just make sure you have done proper amendments and have updated the shipping details so that you get your refund properly. right? Similarly, when it comes to the merchant export, so if you have made supply to the merchant exporter at the concessional rate, then we again have to ensure that all the conditions has been compliant with. So we know there are a lot of conditions when it comes to the selling to through our merchant exporter, so that is something you should always fulfill. Similarly, if there is about the refund, because we know that there is a timeline for even filing the refund application. So just make sure that you have filed for the refund application, be it your refund against the export transactions, or it could be refund because of the inverted duty structure. So whatever the case may be, just make sure you have filed proper refund application too. Right. So this was about the important points. Now when we talk about, similarly when it comes to the payment in case of export of services, right now we just talk about export, we talk about LUT, we talk about, okay, there's a shipping details which we should make sure. Similarly, when we talk about if there is an export of services, again just make sure that you have received the payment, and there's a timeline for receiving that payment from that invoice date. Again, when we look into the 1 year, after 1 year, within 15 days, you should get the you should get the payment. If you have not received, then they are going to recover that amount from you. So this is another important point which we should always keep in mind. If you are with an expert or dealing with an export of services, whether you have received the payment in respect of that or not. Now, going to the next point, because we are talking about the sales and the supply related points, then the another important point is about the advances. Many times we know that we have received the advance against the services. So whenever we have received the advances against the services, we have to pay the GST at the time we have received the advances, right? But many times we may forget, right? We don't even know that, okay, this was an advance, and we are actually paying the taxes only when the proper sales invoice was issued. So here again, look into your transaction, and as on 31st March, just check is there any advances, and you don't have any corresponding invoice against the same, or you have not issued any invoice, or you have not supplied the services. In that particular case, just show, record that while you're filing your March return period, and show, okay, these are the advances and this is the taxes on top of it. And there can be the vice versa case also. There can be a case that, okay, you would have earlier already paid the taxes on the advances, and when you would have earlier already paid the taxes on the advances, then after that you have also raised the invoice and you have also shown the invoice on the portal, and you have paid the taxes on top of that also, but you forgot to do the advance adjustment. There can always be cases that there was an advance, you paid the taxes on advances, then you raise the invoice, but you forget to do that advance adjustment. So if that's the case, then again make sure that whether that advance adjustment in respect of every advances where you have already paid taxes is done or not, right? So this is like another important point which we should again keep in our mind. Now, when we were talking about all this thing, that we all understand that from that purchase perspective, we will be anyhow talking about that in detail about the ITC reversal, the ineligible, the reverse charge. So we are going to talk about all of this thing. But now, from the sales perspective, also, if we just talk about that, we all know that today the government is very strict when it comes to the ITC part from the recipient angle, right? You were the seller, you have supplied something to the recipient sees that particular document in their 2B, and accordingly they just go ahead and claim the ITC. But there are always the chances that you yourself forgot to show that invoice. That could be one thing, that you had shown that invoice, but you would have shown that as a B2C document rather than B2B, but you have actually paid the taxes to the government on time. There was no problem in that. There was a third case where you would have entered the wrong GSTN. Instead of GSTN A, you would have entered GSTN B. So the credit was reflecting in the GSTN B rather than GSTN A, right? So these are the cases you may always see, that it's always good that you actually write a proper mail to all of your customers if it's a B2B customer, right? So that you may just take a confirmation that, hey, as per me, I have already correctly reported everything in my GSTR 1, and I have also properly paid the taxes in my GSTR 3B. There is no discrepancy. As per me, you should be able to go ahead and claim proper ITC. And this information will also be reflected in your GSTR 2B. If that's not happening, please write that back to me so that I can make the amendments and the adjustments now itself, so that I can properly close my books of account, and I should not do all these entries maybe post my this year, because otherwise I will have a lot of reconciliation entry created in the next year which is related to my this year. So it's always good that you write a proper mail to them, get a confirmation from them, so that you don't get all these things at a later point of stage. Though we have a period of amendment till our, I would say, October return period. We can always do any amendments in the, or the till the period of October return period, which is by 30th of November. But it's always suggested that you close all the adjustment entry by 31st March itself, rather than going in the next financial year till my October return period. So here it's always suggested that you drop a mail, get a confirmation from all of your customers. Similarly, just look into the transactions like where you have a incomes like sale of fixed assets, if they are taxable or not. If there is a taxability on the liquidated charges and all, you should just look into that. If there is any income which is correctly, if there is some income which have been shown but you have not charged some GST, just look into that also. And also always review your fixed assets register for any GST application. So you should always look into this. Now, whenever we look into this, there is always the related party transaction where there's always an eye of the assessing officer on the related party transaction. So, see, you should always look into the related party transaction on the distinct person, or if there is any deemed supply. You should look into this very carefully while you are scrutinizing your trial balance or maybe the PL account, whether the related party transactions has been correctly shown or not. So if there is a branch transfer and all, whether the taxes have been paid properly or not, whether there is no consideration, but you had certain transaction, let's say between principal to agent and all, and it is deemed to supply as per schedule 1. In such case, whether the GST has been paid or not. So many times you may say, okay, I have not received any consideration at all. It means I'm not supposed to pay any taxes, but that could be the case that it is covered under schedule 1. So you again have to make sure whether it's a supply and whether what taxes you have to pay as per the valuation rules. Again, when we are looking into this, not only this, you should, many times we don't even report our exempted supply, right? There can be other supplies like exempted supply, the non-GST supplies and all, which is actually maybe it's not obviously related to GST, but that does not mean that this will not form part of my GST 1 or GST 3B. There also we have to be very cautious that if this is an exempted supply, still it should be properly shown in my GST 1 and my GST 3B, so that my turnover is correctly reported, right? There is no problem with my turnover. Obviously, there can be differences in the turnover as per the income tax and the GST. That is okay. But at least for my 99% cases, the things will always work. There can be the cases where I know that this turnover definition itself is different, but that reconciliation part also you should create it now itself. We know that in GST 9C, right? 9C, we always show, okay, this is my turnover as per my books of account, this is turnover as per my GST 1, or maybe I will say GST 9, and this is the differences. Why not make the differences now itself? Why not understand the differences now itself rather than waiting till my GST 9 is prepared? Right? So that if there are certain adjustments to be done, can be done now itself rather than moving that to my next year. So this is something we should always take care and keep in our mind. Similarly, if you feel that there are certain credit notes which had to be issued maybe because of some bulk discount which was promised and we were aware about it at the starting, so in that particular case, just make sure that though we have a timeline of issuance of the credit note, which is again till my October return period, which can be filed till my 30th of November, though I have a time limit for that, but still it's always suggested that you raise all the credit notes which was done to be done now itself, so that you don't face problem at a later stage. Similarly, if there is certain GST adjustments which for the discounts and all to be done, you should always do that. We again at the same time understand that the credit note can be issued only in the two cases, and the two cases over here can be like when we are talking about the credit notes, right? So there are the two cases. It could be the differences in the tax rate, or it could be differences in the value itself. Then we always raise the credit note, or if there could be a sale or the sales returns and all, right, we always raise the credit note. So this was something which was related to sales supply. And again, there can be certain amendments and the corrections which we already talked about. You would have missed certain documents, right? You may have missed reporting certain documents in your GST 1 or maybe GST 3B, or maybe even in books of accounts. There was an entry, but you have not shown proper GST and all. Maybe you forgot to even book one of the income. In that particular case, again, do a proper reconciliation, file for the corrections, do the additions or certain amendments, whichever is related to your FY 22-23, so that there is no spillover effect to the next year. So this was something, and in the same way we may have certain thing called reimbursement. So many times we say, okay, anyhow this is my reimbursements, I was not liable to pay any GST on top of it. But again, please look into this transition very carefully. If there was certain reimbursement, we understand that you don't have to pay any taxes, but to cover under that there is a concept of pure agent, right? And this particular thing has been defined in our rule number 33, and the rule number 33 says that the supplier act as a pure agent if they are making the payment to the third party on the authorization of the recipient, and there are certain conditions which should be fulfilled. Unless you fulfill this condition, you are not even categorized, or you are not even set as a pure agent. And unless you are referred as a pure agent, that reimbursement, right? If you are a pure agent, then there is no problem, there is no tax on the reimbursement itself. But if you're not acting as a pure agent, then you may end up paying the taxes on that. So this is something we should carefully look into, right? And when we look into the pure agent, so this is the definition of the pure agent. What exactly that means, that you have entered into a contractual agreement with the recipient of supply to act as this pure agent. And I think Shravan saying, if you can give certain example. So see, one of the I think the best example for the pure agent could be the CA services. Let me talk about the CA services. What exactly happened? Let's say there was a CA or maybe a CS who was doing a company incorporation, right? So when the CA was doing a company incorporation, in that particular case, what happened? There was some MCA fees which has to be paid. When the CA has to pay the MCA fees, obviously the client said that, okay, for now you only make this payment of this MCA fee. I will give you the payment at a later stage along with your professional fees. So I will reimburse the government fees to you once you are done with the payment, right? Which is a very practical example, is a very normal example, and this happens like I would say 99%, where the client says, I will be making you the full payment. You just do the payment on behalf of me to the government also, rather than me directly making the payment to the government. So that was what happened. Now let's assume the CA fees was, let's say 10,000 was the CA fees, and let's say the government fees was 2,000 rupees. So total was 12,000. Question is, when it comes to the GST, whether the CA is going to charge on 10,000 or 12,000. So the answer over here would be, if we just think normally, right? Let me ask you this question: whether the CA in this particular case will be going to charge GST on 10,000 or they're going to charge on 12,000. I could see Sukanya says 10,000, Shavan says 10,000. Janvi says 10,000, Shavan says, so everyone is saying 10,000, and which is right also, right? Why would I pay something which is not even my income? So if I'm a CA, obviously that 2,000 is not my income. It was something which I collected from a customer and paid it to the government. That is what had happened. So this is something, a case of reimbursement. Now reimbursement, here the government says, okay, you don't have to pay taxes on that. That is okay. But you should get covered under the definition of pure agent, because here you are working like a pure agent. So if you are working like a pure agent, so whether you're fulfilling these conditions or not. So they are saying you enter into a contractual agreement with the recipient of the supply to act as a pure agent to incur the expenditure or any cost in the course of supply. So what we do always is that whenever we are raising the invoice to this particular client, right, we always say, okay, this is a professional fees which is 10,000, this is the government fees which is 2,000, which is just a reimbursement, and then you charge the GST only on 10,000. So here we neither intend to hold nor hold any title of the goods or the services. There's like nothing we are not going to have that for ourselves, right? This is something we have just directly paid to the government. So here we does not use any of our own interest, and we actually receive our additional, the actual payment. Though I paid the government 2,000, I only recovered 2,000. I was not recovering any extra service fees for that. I was not asking, okay, you give me 2,500 because I am doing all this for you, and I'm not going to do that. So if I'm going to do that, in that case, my maybe fees would be 10,000 plus 500, which is service charge, right? So here I'm not doing that. Here, since I'm going to recover only the actual amount which I have paid to the government, which is the MCA fees, so here this becomes a part of our pure agent. So here what we have to see, we have to always look into this carefully and try that whenever you're having this, you have a proper document for it. Even for the reimbursement thing, right? When you're raising this invoice with the customer, right, you should actually attach the bill for the actual receipt which you're getting from the MCA. So whenever there's a reimbursements and all, try to put the actual receipt so that you don't end up paying tax at a later stage. So whenever the government does the audit, you have all proof that, okay, this is just a reimbursement. I have a proper actual proof which I have actually recovered from the customer also. Okay. So this is something which we should always keep in our mind. So I could see there's another question from Mohammed who is saying, I received advance in the month of March from our client and the client applied GST. How I will show GST in our GST 1? Okay, so Mohammed, if you have received the advance, right? So when you are receiving the advance from the client, which means ultimately you have to pay the taxes to the government, right? Because this is advance. I'm assuming it's against the services. So their client is not going to charge any GST because that's a customer, right? Customer is not going to charge any GST unless it's a reverse charge supply. And I'm assuming it is not even a reverse charge supply. So in this particular case, what you have to do if it is inclusive of GST, because let's say if you have this person says, hey, I just don't know what is the GST and all, you take care of this. See, there can be two cases. Think about you are going to supply him something worth rupees, let's say, there is an example of 1 lakh rupees of the services and 18,000 of the GST. And total amount was 1 lakh 18,000. This client may pay you, okay, for now you just take 50,000 as an advance, right? There can be two cases here. This person is only giving you 50,000 in advance and not any GST payment at all, right? Or this person may say that, okay, you take 59,000 for now and rest of the 59,000 I will give at a later stage. So here what we have to do, we have to assume that the advances which we have received is inclusive of taxes, is inclusive of GST. So in this example, that if I have received 50,000, I will assume that this 50,000 is inclusive of GST, which means let's say my GST tax rate is 18%, then 50,000 divided by 118 multiplied by 18 becomes my the taxes, which I am liable to pay this to the government now. And the rest of the amount I am anyhow going to pay while I am raising the proper GST invoice. Now coming to how exactly I'm going to show that in my GST 1. So we know we do have one section called advanced receipt, right? So there is an advanced summary which we actually send to the government, which show at a 18%, and there you will be telling that amount, which is the back calculated amount which you have come up with, that is a taxable value. And on that, whatever the GST amount is coming up, you have to show that GST amount to the government in the particular month. So in March, you are going to show that. Now, let's say finally in April month, you have finally issued the invoice, and that invoice was for 1 lakh plus 18,000. So when you actually have issued the invoice in the month of April, you show proper invoice, which is, let's say it's a B2B invoice only, or it could be B2C, right? It can be anything. Let's assume it's a B2B invoice. You show proper invoice detail, which is, let's say, INV1 with this particular date and everything, right? I could see Mohammed saying it's a B2C invoice. Okay, let's assume it's a B2C invoice itself. It does not have any GST number at all. So you just show the B2C as summary. Then as I'm assuming like this is the only B2C supply you have done. You just show, okay, 1 lakh was our total taxable value, 18,000 was a total tax amount. Right? You will just show as a normal B2CS. And then at the same time, we do have one section called advance adjustment. That works like a negative section, right? Under advance adjustment, you just show that amount which was shown in the previous month, right? In previous month, you would have shown something as advanced receipt. That amount you just show under the advance adjustment, so that you will now pay while you are now filing, right? This information will be populated in your GST 3B, and 3B may you will only get the differential amount. So you will have all the B2C minus advance adjustment. So you will only pay the differential amount in your GST 3B. Right? This is how this entire transaction will work. But let's assume you may say, okay, I actually received the advances in the month of April, and that was something, right? But May month I may receive some partial advances. So that can always happen. So you have to just show where, as and when you have received advance, just show in advances. Whenever you receive, you have issued the invoice, then you use the advance adjustment. I could see another question is, it's B2B client applied for GST. Even it's a B2B transaction, right, Mohammed? So the question is whether it's your outward supplier or it's a client outward supplier, right? I'm assuming that you are a supplier here. If you are a supplier, then you are liable to pay the taxes on that and not the final customer, unless this particular transaction itself is covered under reverse charge. And I have assumed that this transaction is not covered under reverse charge. In that particular case, you are supposed to pay the taxes on the advances to the government and not the recipient. But let's assume this is a transaction. The transaction itself was covered under reverse charge. In that particular case, you don't even have to report these advances on the government portal, right? So if this transaction was covered under reverse charge, then this advance thing, right, you don't even have to report on the government portal. So hope that answers your query. But if you have any further query, you can just post to the chat box. Then there can be other important point which we should again keep in our mind. We all understand that many times we may end up showing the incorrect tax type, right? Rather than charging IGST, we would have charged CGST, SGST. That can be a case. Now, again, there you have to first see whether this was a case in the invoice itself you have made a mistake, or you have correctly issued the invoice. It's just like while reporting the GST one, you have made a mistake. It could be anything, right? So if in the invoice itself you have made a mistake, rather better you just first raise a credit note to nullify the transaction, and then you raise a debit note with the correct text type. That is how you should always do that. But let's say while reporting in GST when you made a like problem, or there was a problem there, then you correct that. You should always file for an amendment. Either it's a B2CS summary amendment or a B2B amendment. Just file for that amendments. So this is something which we should always do when it comes to, there was something. But anyhow, when it comes to interest, there won't be any levy of the interest. So if you have already paid some tax, let's say you have already paid IGST instead of CGST, HGST, you can make the correction, but when it comes to interest, there won't be any interest on that. So this is something we should always make sure. We should again see that it's whether the tax has been paid correctly or not. So that should be there. Just make sure, put a special attention to the intermediary services, because there are a lot of confusion which always happens when it comes to intermediary services, and we ourselves get confused, okay, whether even it is covered under intermediary services or not, what is the place of supply and all. Always look into this transition very carefully, right? So this is something. Similarly, we should always check the GST implication on the employee recovery which has been deducted from salary. So see, I will tell you few of the cases, right? Many times we know that, okay, there was a contract with an employee, right? And we may have recovered some amount from that employee when this employee has left the organization, right? If this particular employee has left the organization and we are recovering some amount from that particular employee for XYZ reason, maybe because of the damage of the laptops, or it could be anything. In such case, again, you should understand that once the person has been terminated, or now he's not into the system, so the relationship between that two person is not an employer and employee relationship. And if it is not covered under that employee and the employee relationship, then this is not considered as a no supply. Because if it's an employee relationship, we don't have to worry about it. It's a no supply thing. But if it's not that, if that's not the case, then we have to again carefully look into this transaction and just see whether GST is applicable or not on that particular transaction. And in most of the cases, you will see GST is applicable, and you should accordingly pay the GST also. I could see there's another question from Srinivasan, who is asking, my client is a security service company. They purchase uniform of security guard, and later they recover the amount from their salaries. Okay, so see, if if your client is like a security service company, and when they are purchasing this uniform for the security guards and all, and then they recover the amount from their salaries. Okay, they're covering the amount from the salary and all, right? Now again, we have to look into this transition. So is it like you're dealing from that company, the security service company? Are you talking from that perspective, or you're talking from a perspective where you yourself is one client and you have availed the services of the security thing, right? So we have to look into this transaction, and accordingly we can answer whether you're talking from you as a person, or you as a person who is going to pay the amount to the security service. Because if that's the case, then obviously it's not your sale at all, right? It's something that it is actually the supply of the security service company. If that's the case, then in that case, whatever he's charging from you, right, whatever he's charging from you becomes that he has to pay the taxes on the overall amount, right? That is how we have to look into this transaction. So till now we actually had covered a lot of things which was in relation to sales and supply, right? Similarly, we had a lot of things in relation to the inward supply too. So just to summarize, like what all we actually have discussed, like because we actually discussed a lot of things. So whenever we are thinking from the sales perspective, the one of the important point was that whether we have done a proper reconciliation between GST 1, GST 3B, the books of accounts or not. That's the first important point. Do a proper reconciliation between these three. And whenever I'm saying books of account, not only look into the sale register which you have created. Always look into the other transactions also. Always look into your trial balance, the PL account. Okay, if this is the entry, whether GST is to be levied on that or not. It could be your interest income. We understand, okay, it's not supply at all. It's okay. But you make a reconciliation entry. You should know the differences, that I have not considered this as a part of my GST, but this is a reason for that. Similarly, if there is some other income, there is sale of fixed asset, okay. The sale of fixed assets is exempted supply, whether I'm making part of my GST or not. Try to make that part of your GST1 so that this comes under exempted supplies, and accordingly, as per rule number 42, you have also done the reversal, right? Similarly, there can be other incomes too, right? There can be something which may be part of GST1 but not part of your revenue jail, like maybe the branch transfers and all. Then again, you have to make a proper entry for that. Okay, there's certain branch transfer not part of my trial balance properly, but it is part of my GST1. So you should do a proper reconciliation. There can be something which is part of GST1, but you have not paid taxes in GST3B. Even within the GST1 itself, you may have missed reporting certain the customer GST properly. You would have categorized as a B2C supply and all. So this is something we should always keep in our mind. So always look into the credit side, look into each and every transaction very carefully, and accordingly see whether GST is charged or not. Similarly, we talked about the e-invoicing, right? If that's say your turnover exceeded, which is more than 10 crore in FY 22-23, then in that case, invoicing is applicable. Make sure that you have filed for the LUT in case you're dealing with an export without payment of IGST. Make sure in case you're an exporter of services, you actually get the amount from the customers. In case you had certain advances which you have received in respect of the services, then make sure that advances has been properly reported and the taxes has been properly paid. If you have already issued the invoices, again the advances, whether you have done the proper advance adjustment entry or not. If you have already filed 1-3B properly, everything was done. It's always good that you also mail to the customer just to get the confirmation that everything would be reported or reflected in your 2B, and just make sure that you are able to claim the proper ITC. Because it should not be the case that the time limit was lapsed and that person was not able to claim ITC, and then that person is asking you to, or they are asking you to, or actually recovering that amount from you, but you would have already paid taxes. So many times you always see this case that you may have paid taxes of B2C supply because the customer GST was not valid or you didn't have the correct GST number. Now this recipient was not able to claim ITC. This person has not informed you. You were not aware about the transaction. In that case, at a later point, he may ask you, okay, I'm not able to claim ITC because of you, so I'm not going to pay you the ITC amount at all, the GST amount at all. But you would have already paid the taxes to the government. Now, the time limit for that amendment was also less, for example. Then that becomes a very big problem. That becomes a chaos in such case. So it's always good that you get the confirmation from the customer itself that I have already reported everything correctly in my GST1 and I have also paid the taxes in my GST3B. You just give me a confirmation that you are able to see all these invoices in your GST2B or not. And if there is certain differences, just let me know so that I can file for the amendment or I can do the corrections if any required. Similarly, you have to look for any other income like sales of fixed assets, the taxability of liquidity damages and all, whether the GST has been charged correctly or not. Look after your fixed assets, register carefully if there was any sale or not, something which was disposed of. All of this thing needs to be properly looked after. Similarly, if there is certain implication on the related party transaction, the valuations which we do, for example, for free supply, right? The valuation, how we have done that valuation, just review that once. Look after the exempt supplies, whether it has been correctly reported or not. If there is certain credit note to be issued, which is still not issued, just raise that credit note too. Similarly, if there are certain adjustments to be done in case of the discounts and all, it's always good that you do that. And if there are certain amendments and corrections, we have to do that. You have to also always look after the GST implications on the reimbursement, see that you have a proper proofs, everything has been kept in mind or even have been documented it properly. So this was some points which we discussed in relation to the sales side. But similarly, we do have a lot of schemes by the government, right? When we have a lot of schemes by the government, we should also understand that there's a time limit for opting of their scheme. So this is also something which we should always look after. For example, composition scheme. So if it's a small dealer and you want to opt in the composition scheme, you should do it now, or you want to opt out of the composition scheme, you should also do that same thing. Again, if your turnover is up to 5 crore, we know that we have an option that we can always file the quarterly returns. We can file the quarterly GST1 and a quarterly 3B. Though when it comes to the payment, again, we have to do basis on the monthly basis itself. But when it comes to filing of GST1 and filing of 3B, it can always be done on the quarterly basis. So that all the opt-in and opt-out, right? For FY, which is Q1 23-24, can be done by 30th April. So that's the timeline. So it's always good that you always do that. If you opt in that you want to file on quarterly basis, do it now itself so that you don't forget for that. Then if you're a GTA, if you're a goods transport agency, again, we know this is something which is already enabled on the government portal. So for the GTA, right, Here we know that GT have an option whether if they are going to opt to pay the taxes under forward charge, right? So they have an option. If they're going to pay the taxes under the forward charge, they can either pay at 5% without ITC, or they may pay at 12% with ITC, or then the third option is the reverse charge, right? But if they're willing to pay the taxes themselves under the forward charge, in that particular case, they have to file one application. They have to opt for that, and for that they have to first log into the government portal. They have to go to the services, then under user services there's an option for opting for the forward charge payment via GTA. So they have to do that and then file for the OTP. So this is another important change which we should do that. Sorry. Then there is another important part which is actually related to the input tax credit. So I could see there is a question from Shravan who is asking, can GTA change year on year forward to RCM? Yes, Shravan, they can change year to year, but they cannot change within the year. Right, so year to year, that is there, that option is available. But when it comes to within the year, can they change? The answer is no, they cannot change that. Now, the another important changes are in relation to input tax credit. I think this is a really very important part when it comes to the input tax credit and looking after the date, which is our deadline, which is 31st March, right? So, if I talk about the input tax credit, the first is our ITC reconciliation. There were a lot of changes which has been done by the government itself. So we know that in the month of August itself, right, the government, they had come up with a way how we used to report our taxes or the ITC in our GST or 3B. So that have been changed. They have started looking after 2B and then how we report it. There would be a lot of changes. There would be a lot of nuances over there which has to be solved. But the important point is that you reconcile your entire year, right? The one part, try to close everything which is related to a particular in that same year rather than pushing that to the next year. There should not be any spillover effect, but obviously there would be some when you can't claim ITC, you don't have any option. But just try that everything has been recorded properly in your GST 3B for the month of March itself, which is related to FY 22-23. I will give you a few examples here. See, we should first run the entire reconciliation between your 2B and the 3B, right? Do the entire reconciliation between your 2B and 3B, right? Once you have done the entire reconciliation, you will get, okay, this was some ITC which I have already claimed. This is ITC reflecting in 2B, but I have not claimed. This is some ITC which is reflecting in my PR, but still I was not able to claim it because my supplier has not filed. This is something which was discrepancy between what as per me I can claim ITC, but what my supplier has filed. So there can be certain discrepancies also. See, where it is matched, you have claimed, there is no problem. Everything was sorted. Where there was actually a problem was that, okay, I had not claimed because my supplier has not filed. Right? That could be one case. I have not claimed because my supplier has not filed. Keep a record of that entry. That is one thing we should always keep in mind. Keep a record of that entry. Communicate with all of your vendors and ask your vendors to file that in their GST1 for the month of March itself, so that you can go ahead and claim ITC related to all of the documents which was related to FY 22-23. Wherever you see this was part of your purchase register, but your supplier has not filed, ask them now itself that these are the documents where I'm not able to claim ITC because you have not filed your GST1 correctly. Right? So this is something we should always do, that do a follow-up so that you should be able to claim it before your next month filing, which is your in March month filing itself. You should be able to claim all that pending ITC. There can be the second category where that ITC was reflecting in 2B, but you have not claimed that ITC. Right? The case could be only two. One case you forgot to claim it. If that's the case, just go ahead and claim that ITC in your March return period itself. The second case could be that your supplier has wrongly filed something which was actually not related to your GST at all, right? If that's the case, then ask the supplier to amend that so that entry itself goes away, right? So you have already amendment, so the net of impact becomes zero. And maybe the third case could be that you have still not received the goods and the services, so that was the main reason you are not allowed to claim the ITC and you have not even claimed that ITC. That could be the other category. In that particular case, make sure for all that ITC you had done or added that entry in 4A5, and you have also done the temporary reversal for that in 4B2, right? So in such cases, make sure that entry you have put wherever it was part of 2B but not part of your purchase register, you have added that as a part of 4A5 and also have done the temporary reversal, so that when you sum up, right, when you sum up the ITC as per your GST 3B from April till date, that value always matches. Like that is something. There may be discrepancies, especially with the cases where earlier the credit note you have shown in as a part of table number 4B2 rather than showing under the 4A5. You may see certain discrepancy, but just make a record of that. Just you should know why there is a discrepancy between this, right? So the important part is do a proper reconciliation between your 2B, your GST 3B, and your books of accounts too, right? Because books of accounts again becomes very important. You may end up not even showing certain document. You may have missed it. It was coming in 2B, you have not recorded it. Just record that entry in your books of account. There can be a cases where there was an ITC which was ineligible, but you would have recorded that directly, you would have expensed it out. Right? It was ineligible, you have directly expensed it out. Try to make a proper entry in your books of accounts itself so that you are directly or correctly showing in your GST 3B also. So these are something which we should again keep in our mind while we are doing all this reconciliation. Just make sure all 17.5. There can be a cases where you would have wrongly claimed ITC, but you were actually supposed to reverse that ITC. If that's the case, just reverse that ITC now itself while you're filing your March return period GST 3B, right? So this was main in relation to ITC. Then we do have a closing ITC balance. So again, make sure the ITC balance as per your credit ledger and the books of accounts is matching. Obviously, there would be differences where it is a kind of a deferred ITC which you have not claimed, right? So you should always pass the proper entry for that. Even if there was certain ITC which you have not claimed in a particular month, just pass proper entry in your books of account that this is ITC. I know that from this ITC, so this is total ITC as per me, as per my purchase register. Out of that, this is something I could claim, and this is something I cannot claim in this month. Put that as a part of deferred ITC. Then you may reclaim it, right? You may always claim it once you see, okay, now this particular ITC is coming in my 2B. So just make sure all the adjustment entries in relation to the ITC and its utilization has been correctly passed in your books of account, because when you close your books of account, you see a correct picture. So this is another part which we should always take care. Similarly, when it comes to, because when we talk about the ITC, right, another important part is the ITC in relation to the import of goods. For again, when we talk about import of goods, we know that this ITC, when we file bill of entry, right, ICE gate, this information gets populated in our 2B. We accordingly go ahead and claim ITC in our GST 3B also. So here, the important part, there can be cases where the ITC, I know I'm eligible to claim ITC. I have actually filed the bill of entry. I have paid proper taxes, but still I could not see that entry in my, I am not able to see that entry in my GST 2B. If that's the case, then please pull that information. So we know that on the government portal, there is a functionality, which is again under the user services. There is an option to search bill of entry. Do a proper reconciliation in respect of the bill of entry information, which is reflecting in your 2B, with what is the bill of entry as per your books of account. Do a proper reconciliation between these two. If there are certain mismatches and you see that certain information is not coming in your 2B, fetch that bill of entry from the ISK to 2B itself, so that that gets reflected and you run a proper reconciliation and see everything is now matching and there is no dispute, there is no discrepancy. There can always be case that maybe you would have filed bill of entry, but you actually have not received the goods. It may take 1 day or 2 days, right? So, and this happened, like say 31st March, you filed some bill of entry, but you actually received on 1st April. There can always be case. Now you will be able to claim ITC only in 1st April, but make proper reconciliation entry for this. That this is an ITC I know I have claimed in the next month, so that you don't end up saying this thing or seeing all these differences at the time you're filing for 990. You should just make sure that all the adjustment entry which has to be done, which you can do it now, you just pass it now itself, so that you don't have to relook into all this transaction again while you're filing for your GST 9 or 9C. So when we are looking into this, similarly, we have certain thing called ITC blocked, ITC reversal. Let's say if I have claimed ITC, but I have not paid or I have not made the payment to my vendor within 180 days, right? In that particular case, I have to do the reversal. So you have to just look into their transactions, whether the payment to the supplier has been made within 180 days or not. If not, then you have to do the proper ITC reversal or you just make the payment. Then again, there could be certain things where you may see that, okay, there are some goods which has been destroyed, the stolen. You have to see whether the proper ITC reversals for the same has been done. The important part is also about rule number 42 ITC reversal. We know that when it comes to rule number 42 ITC reversal, where we are supplying both the taxable and the exempt supply, and when it comes to the common credit, right, or the supplies in which supply which has been in relation to the exempt, there the ITC part which we have received the input and the input services, we have to reverse that, right? And there is a proper calculation for that. So in that case we reverse that on a monthly basis, but then again on the basis of the turnover for the entire year we have to again reverse that ITC, we have to recalculate, and if there is any differential thing we have to reverse it, or if let's say I have reversed extra then I have to claim it. So that entry also we have to do while you're trying to file your March return itself, because you would know that what is the entire turnover for the entire year. Basis that, also do that adjustment entry in the March month itself, because there we know that there's also a tax implication. Not only the tax implication, there's an interest on top of that, right? If there's something I would say I have not reversed it properly, then I have to even pay the interest on top of that. So this is something we should always do it now itself when it comes to the ITC reversal as per rule number 42 or 43. If there's some ITC which has been blocked, then you just check whether you have claimed ITC. If you have claimed it, just reverse it. So these are certain transactions which we should again look after. Then the another part. So right now we just talked about ITC, and ITC there's a lot of things, right? We talked about import of goods, then we have to even think about import of services. But whenever it comes to the import of service, and one important part which comes into our mind is about the reverse charge, right? Because import of services, we know that we have to pay the tax on reverse charge, but it's not only import of services, it could be other transactions also where we are liable to pay the taxes under the reverse charge, and many times we missed paying the taxes under reverse charge. We may have purchases, but I myself don't know, okay, this purchases was actually under the reverse charge, right? So we actually forgot to do that. So the important point is that look into your all the expenses which you have, look after every purchases entry which you have done, and check whether any transaction is covered under reverse charge or not. If there are certain transactions covered under the reverse charge, whether you have paid correct taxes to the government or not, right? So this is the one important point which we should again look after. Second important point, many times what happened, maybe my supplier would have already shown that this taxes has to be paid under reverse charge. My supplier has correctly shown that this taxes has to be paid under reverse charge. It was even reflecting in my 2B, but I forgot to discharge the liability on the top of this. In that case, again, just check in 2B from the registered supply, right? Whether that taxes has been actually, the taxes on that supplies has been paid and shown in 3B or not. So that's another important point we should always take care. Similarly, you should always look into the transactions which is high value transactions. If you have import of services, whether taxes has been paid, if there's some payment to the director other than the salary, whether the taxes has been paid, there's sponsorship amounts, right? So these are mainly at general, right? This is the high value amount. Just look after this, whether the taxes has been paid on the reverse charge or not on these transactions. So here, so many times we actually forgot to even record that. That's an important point which we always miss out. We forgot to report it. Maybe whatever is reported, I have correctly paid, but I actually forgot to record that itself. I don't know that, okay, this transaction was covered under reverse charge. So it's always good that you scrutinize all the transactions and see, okay, what are the transactions which are actually covered under reverse charge? And if you have not paid the taxes, just go ahead and pay the taxes. So now when we're talking about paying the taxes under reverse charge, the important part is also about claiming the ITC on top of it, right? So similarly, when we are paying the taxes, just make sure whether you have also claimed the ITC on that, right? There can be some services where the taxes has to be paid under reverse charge, but you cannot claim ITC on top of that. For example, rent a cab. You may have to pay taxes under reverse charge, but you cannot claim ITC on that. So you should always even look into that. Out of the taxes you have paid under reverse charge, check the entries where you have to claim that ITC, where you can actually claim the ITC. So where you can claim the ITC, check whether you have claimed the ITC or not. This is the another part we should keep in mind. I think there is one question which we keep on getting like many times, which is about, can I go ahead and claim the ITC in relation to the reverse charge supplies in the same month or not, right? The taxes I have shown in my 3.1D, can I also go ahead and claim that ITC in the same month? And can I just show that amount in my table number 4A3 and the 4A2? So answer obviously for this is yes, we can always do that. That was a service tax where we could not do it, but when it comes to GST, you can always do that. You can always claim the ITC, and it's always suggested also that you should always claim that ITC in the same month, because many times you will always see discrepancies, right? So it's always good that whenever it comes to ITC, 3.1D should be equal to 4A3 and 4A2. That is something we should always do that, because whenever it is in the same month, you will never see the differences at all, and it's very easy to even explain to the department. Or the value in 4A2 plus 4A3 is less than what is even reported in 3.1D. So this is something we should always keep in mind. Similarly, when we're talking about this reverse charge, we understand the reverse charge can be when you're purchasing from the registered person and their supplies are covered under reverse charge. It could also be in cases where you're purchasing from the unregistered person and that supplies are covered under the, I would say that supplies are covered under the reverse charge, right? So, but important part is that whenever you're purchasing from the unregistered person, we also have to issue a self invoice, and that is the document basis which we go ahead and claim the ITC. So many times we missed properly, or we actually missed making that invoice itself. Just make sure that you have properly documented, you have properly created that self invoice and documented that, so that we can always show that as a proof that okay, I have a self invoice basis that I have gone ahead and claimed the ITC. So this is like another important point which we should always keep in mind when it comes to the reverse charge. Then there can be other parts, like for example job work thing. When we talk about, I could see there's a question from Shravan who's asking whether the RCM self invoice for only URD. Yes, Shravan, the RCM is only in respect. So whenever I'm talking about self invoice, is only in respect of purchases you have made from the unregistered person, and it is under the reverse charge. So it is not in respect of the purchases you have made from registered person and under reverse charge. If you have made from the registered person, then the supplier itself will be raising the invoice to you. You don't have to raise any invoice. The invoice, self invoice, you have to raise only when you are purchasing from the unregistered person. Then the other things can be like job work and all. For example, job work, you again have to make sure if you have sent certain goods to the job worker, whether it has been returned, because we know there is a time limit for that. Within the 1 year you should get that in respect of the inputs, and if it is capital goods, you should receive within 3 years. So you just have to make sure this has been done, the proper ITC 04 returns has been filed. If there's certain amendments, modification has to be done in respect to the business places, that has been updated. If there's some update required for the director details all, authorized signatory all, you should always update that information. Then invoice number, we can from 1st April we can always start for the different invoice number, so you have to just make sure that invoice series has been compliant with. Then there can be HSN thing also, that again you have to make sure that every invoice which you are issuing, you have properly from, especially from the 1st April, right? You have to make sure if your turnover is up to 5 crore, then 4 digit at least has been mentioned. If it is more than 5 crore, then at least 6 digits should have been mentioned. Then other points is just check for the supplier status, whether it's active, it's suspended, it's cancelled or not. Check whether the payment has been made within 180 days or not. Just make sure self invoice has been done. Do certain reconciliation between your e-credit and cash ledgers, and also look after the TDS and TCS credit. We all know if you're dealing with an e-commerce operator, then there is also a TCS credit statement, right? Just make sure that there the cash which has been done, you have properly accepted, and that balance has been gone into your electronic cash ledger, and accordingly you have used that money while you're filing your GST 3B. So this was a certain important point which we should understand while we are closing our books of accounts, or we should do before 31st March, or while we are filing for our March return month ka 1 or 3B. So this is something we should always do, and especially when it comes to adjustment entry, right? So whenever I talked about purchases also, if certain ITC you are not claiming, just pass the adjustment entry for the same. Just pass, okay, this is something which is deferred ITC, so I have to pass an adjustment entry. If you're utilizing certain entries, you just make sure that has been done. If you're looking into the revenue jail, just see you have done a proper reconciliation between them. So this is something you should always keep in your mind, and always make corrections so that you don't end up having some spillover effect which is later to 1 year to the another year. So with this, I would like to thanks everyone. Thanks for joining the session, and if you have any queries, you can just ask on the chat box, so I will be happy to take all of your queries. Okay, I think there is no query at all. Okay, so if you have any query, you can feel free to write us at sales@clear.in. So that's like a our mail ID. So we will be happy to answer all of your queries over there. Thank you. Thank you very much.